Hello from Chicago traders. It is 8:03 a.m. Chicago time. Sorry about the delay in getting started here. 3 minutes. Lot to set up and fiddle with. This is episode number 2006. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. A quick mic check. Just let me know how I'm coming across on YouTube and Twitter streaming or Periscope or whatever it's called now. Again, derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's dive right into it. Get into the conversion trading pre-market summary sheet. This morning, risk-off sentiment overall. The market has sold off. And it looks like the overall theme for today is that the U.S. dollar is firming up, along with news, geopolitical news relating to the Russians divesting of $119 billion worth of currency, U.S. currency, and moving it into euro and gold and yuan, I think. In addition to that, there is a lot of chatter about the sanctions as well as the conflict with China. So there's a fair amount here that the market is jittery about. Gold prices dipped as the dollar strengthened. Oil prices were a little changed. But overall, you can see on the pre-market summary sheet here that things have, the indices have come off. The indices have come off. And definitely gold, silver, and copper. There's also inflation pressure in the mix. So that's where that stands. I've scoured through the news feeds. I've got 4 of them, and there's nothing really obvious that's come through. We did get initial claims this morning. The forecast was 386,000 claims. The prior's 406, came in at 385, so that's in line. U.S. ADP employment, which is kind of a forecaster for tomorrow's non-farm payrolls release, was expected at 650,000, came in at 978,000, so this is what's causing some of the dollar strength, apparently. Again, the Russian finance minister, Siluanov, says the National Wealth Fund will sell its dollar assets in retaliation to policies in the U.S. And also, China's foreign minister, Wang Yi, China will take action to defend its businesses against U.S. sanctions and so on and so forth. So this is turning a little bit into a trade war like we saw, in 2018, I guess. And so that's what's driving things. You can see across the board the stocks are off, equity indices are off, and but overall this kind of carries over from yesterday's action. In the S&Ps, it looked weak to me. Yesterday was a breach of the initial balance high and low and held at the low end of the range. It looked like the attempt higher was quite poor. We'll talk about that in a minute. Copper getting hammered, down 2.29%. Copper, of course, is a key element in manufacturing and construction. Bitcoin and Ether holding pretty well. Bitcoin reaching up to the 40,000 again. It's been in a range. Today we have a slew of economic releases that are scheduled. We have market PMI. These are final, not likely to have a huge impact. At 10 o'clock we have ISM services PMI and crude oil stocks. Because of the Monday holiday, crude oil inventories were moved to today. Those are expected at 11 Eastern. And then we have Fed's Bostic, Fed's Harker, and Fed's Quarles coming in. The S&P session, currently 234,000 contracts have traded. Again, the snapshot was taken at 8:50 Eastern. It's now 9:08 Eastern. The overnight inventory 69% short. 69% short. You need to remember that. And the range 43.75 points, right at the edge of what we would consider normal in the last 252 days, as is outlined in the statistics down below. These stats are updated on Sunday night every week. The normal range, or the expected range, or the most common range, the mode of the histogram, is at 31 points. We're well above that. So I indicated yesterday in the Conversion Trading Head Trader channel last night that we are let me clear my throat 1 second. Sorry about that. That yesterday we basically had an inside day and failed to take out the 1550 up top in the S&P and the low of 41.95. We had a complete inside day. Truly a choppy day, which I talked about quite a bit yesterday, but I'm getting ahead of myself in the review. Let's take a look at what was expected yesterday versus what we got. This is from yesterday's video. Yesterday I said 1517 key test area. I'm expecting the primary expectation is we're likely to push down and potentially test this 98 area. This is an 8, folks. This looks awful. Test the 98 and just sit in the middle. I warned yesterday, I think somewhere along this video, I warned that, here it is, looking at that market is resting and is sideways, and just need to take that, be aware of it and take it under advisement is what I said. So set your expectations accordingly, and so on and so forth. This is from yesterday's video. You can see the captions there. In yesterday's video, I outlined the high probability of a choppy trade. And that's exactly what we got. Not that I'm right all the time, but this is based on the narrative that we had. This is what was expected. So the prior session high is way up here at 30. Prior session low way down here at 95. And all we did is we tested the 98. Remember, I mentioned tested the 98 under scenario 1. In case you didn't see it, there it is, 98. Below it, 94. But tested the 98, look for the 98, bounce, and push back up and then hold sideways for the rest of the session. I did expect a test and a breach of 15, but into 16, 17, which brings us into the thin volume up top. But overall, given where we were opening, given the prior week's very tight weekly range, given that it had a high kurtosis, in other words, a lot of volume right at 4204, given that we were opening at 4204, given that the Tuesday session closed at 4200 and had a point of control of 4204, piling on to the prior week's acceptance area, I had warned that it is likely to be quite a choppy trade, an inside trade with a low of 98 and a high of 15 to 17, as you saw in this Trader Bite image. So again, 15, 17 right here, 98 is the low. So scenario 1, not exact, but pretty darn close. And the idea is not to be right, but to know which areas are likely to be tested and to be prepared to act in those areas. Those areas I call stock zones, stock zone levels, and that's what that's all about. So let's clean this up a little bit. And so, let me bring that back. So the important thing to note here, okay, we get choppy and we have an initial balance, which is the first hour's high and low. We expect the market to have done most of its business within that first hour, and that's why the initial balance is important. And if you look at statistics, if you look at a volume histogram on a 60-minute bar chart, you'll notice that the first 60-minute bar is generally the tallest, and it generally dictates the early range of the day. That's what we call the initial balance. This applies across the board to any product on the opening of its underlying sector. So if it's in the notes, bonds, and treasuries, that's the 8:20 to 9:20 Eastern period. So we gauge the quality of the auction based on this initial balance. Is the next thing we have. That's the most recently produced information, or the most fresh information that we have. We breach the IB high, and then we walk right across and down into, remember, we went to the 98 early, so that was the IB low. We went to 98.50. We held the the full session mid, and then we're starting to breach. So what this is it's a neutral, normal day again. This is a market that is undecided, but still we are inside of the prior day's range. We missed the range low by 2 ticks, held sideways, and closed inside of the IB. And all that's saying is the market is in a holding pattern. There is nothing that the market perceives as needing to reprice. Again, inside day, failed to take out the 15.50-16 area, while also failing to take out the prior low. Volume was light at 857,000 contracts in the day session, and it was a pretty choppy day, exactly as was expected. And overall, it put in a point of control of 4,200 against the 4,204 balance zone. Does that make sense to you? I know that's a lot. I'm throwing a lot at you here, but I want you to see how the narrative was expected to play out and how it actually played out. And it's very important to carry the baton from day to day and carry the story from day to day, because that's how we know which side our bias is. And once we know our bias, we move into the stock zone levels, and we start to trade against the stock zone levels. These are areas that are expected to be tested, and they either fail or hold. Nobody knows, but these are the areas we're supposed to act, and we're looking for a reaction in those areas. And there are setup specific activities that we're looking for. For example, right here, a push into, remember, 15.50-16. It pushes into 15.50 or 15 even, pulls back, goes into 14.50, lower high, look for breakout trade, outside in, back to the middle of the range, back to the mid. So we're looking at a trade that's somewhere that's short around 42.11, 42.10.50, looking for 42.05. So that gives us 5 points of gain for about 3 points of risk. 3 points of risk, that becomes a worthwhile trade, because it has more than one return per unit of risk, or one R factor. Very important, these pieces. I'm kind of handing you this whole thing. So the other side that we needed to pay attention to is 95. But I've got to be honest with you, yesterday I didn't fire off a single structured trade, not one. Because even though I could see what the action was, my expectation was fulfilled in that it was choppy, and it just created very poor R factor type trades, mostly, except for the one that I just outlined. I saw a lot of risk for the gain, and it's just not worth it for me to engage with the market. Looking at today, we open back up. This is, remember, this is the pit session here, and everything outside of the dark gray is the extended hours. And we open up, we push higher into the 42.13. Remember, the 15 is still intact, 15.50, last week's high, and yesterday's high still intact. Lower high on the extended trading hours. Consolidate. Europe comes in here and just slams on the bids, and boom, we drop off. We end up having a multi-distribution trend day so far, and we have a little bit of an excess that was created at 41.96. If you recall from yesterday, I talked about 41.75 and 41.73 being key important areas. So what we did is overnight we breached last week's low, which was actually a very tight week, as you already know from yesterday. It was a very tight week, an unusually tight week. And so we breached that low. We still need to do that in a day session for the one-time framing on the weekly to end. And we are pulling back. This thing is trying to push higher, and it's just having a heck of a time of it. Now remember, the last couple of days we had these runs up into the open. So we had a run up here, we had a run up here. We have a market that kind of pushes in the last half hour, which is now, but today they're not showing up. So what we have above us is a fair amount of resistance up at 41.98, 42.04, 42.04, and so on. Those are outlined as stock zone areas. Stock zone areas, that is a service of convergent trading. And so we have a fair amount of resistance above us, and the buyers now have to do a lot more work to squeeze things back into balance. So let's take a look. So last night, the action has pretty decent participation in the delta, pretty good range, pretty good volatility, expecting that to carry into today's session. So the opposite of what I said yesterday, where, hey, we're opening in this balance acceptance area. Be careful. Don't have high expectations. Don't trade breakouts. Today, it's a little bit of the opposite, that we are out of balance from the last couple of sessions, and we may become out of balance with last week. So here's last week. Let me shrink this a little bit to size. So here we are. We've been trading in this balance, in this acceptance, since the second day of April. I talked about this yesterday. I won't regurgitate, but we had this wide-ranging day that spanned the entire range from the beginning of April till now, and that was 3 weeks ago. Then the week after that, we had an inside day, and then last week we had an outside day breaking on the high side, but very little range, with very high kurtosis at 42.04. So you see the profile there, the blue profile, very, very tight. And so we expect the market to break as a result, right? The market kind of consolidates, compresses, because it has nothing new to price in. But as soon as it does, many, many people are likely to be wrong. And so the move away is what's called an imbalance or a trend, and that's likely to create equilibrium in the inventory that's been traded in compression. All these people are, for every buyer, there's a seller in futures, period. There are never more buyers than sellers. And so they battled and they created this very tight range. And now the folks that are long will be wrong if we break below. We broke below in the overnight session. We tested this 41.7350. That is the big picture. You want to trade like a big trader, like a professional, you've got to have this big picture. Even though you might be using moving averages, whatever, you have to understand what the market is doing in terms of price discovery. Very, very important. So with that being said, what we have now is a market that is potentially falling out of balance. So looking at Edge Pro X, we see that in the overnight session, it's been relatively flat in terms of the cumulative delta. And then all of a sudden, the large lots, these are 10 lots to 99 lots, are buying up. And you can see them buying up, starting to buy up a little bit early into the fall, right? So you see the flat line right there. Prices continue down, and the large lots are starting to buy up. The very large lots, these are 100 lots or greater, are not buying. They're flat to selling-ish. And the small lots, which is zero, which is a 1 lot to a 9 lot, are still the ones kind of selling into this. So this reversal is being led by large lots, and generally these people dominate the movement. We have VWAP, as you can see, at 41.8871, and we have the full session mid just above at 41.91 and a quarter. These become key targets right here on the pullback. We're about to clear the low volume node, and we are pretty much good and clear all the way up into the stock zone at 41.95. 41.95 significant resistance. If we get to 41.95 and fail, this creates a great short opportunity back to 41.80 and then back down to 41.75. If we get above 41.95 today, it's likely to be a short squeeze, and now we're back. And what's the price we would go to if we take out the 41.95? Take a guess. I'll give you the answer a little bit later. I want to see if you're following along. The heat map, very thin, but when we get into the 95, a significant area here, we notice that the heat map is not really providing for very much in terms of I would expect some size up here, not seeing it. I would expect some size at 4,200, not seeing it. Just this has been the case with the heat map across the board. And if I look at, this is full depth. If I look all the way down, we see something of 41.65 minor support there in terms of liquidity, but overall just not really doing what's expected. So here's the market profile on a bigger time frame. So we're looking at the market profile on a bigger time frame here, and you can see how the market kind of made a push and has been compressing. And that's why if you're trading, you're seeing that, man, this is just getting really tight and crappy. And yesterday there was this inside day, and so you can see that this is clear bounce here, pretty good distribution kurtosis, and this is likely to, and this has spilled over to the downside. So this is important for us to make note of. Anyway, I'm way over my time. There was a lot to talk about here, but let's get back into what's expected for today, which I've kind of gone over a little bit already, but let's take a look at that. So what are the expectations for today? Today, expecting this to push back and test that 41.8875, 41.91, and 95. So this is a key test here. I'm looking for bargain hunters to push into 95. I'm looking for resistance at 95. And then I'm looking for this to come back, yes, to come back to 42.04. That's the answer to the question earlier. 42.04 balance. We have left. At the end of the day, we're still holding the balance from April 2nd till now. Nothing has happened. Despite this sell-off, risk-off, all this stuff, really nothing has happened. We're still in balance. And as long as we're in balance, we're likely to come back to the most important price in the area, which is 42.04 up here. And then down below, what's the most important price down below? Come on, you know it. 55. 55 is the next most important price. That's the MC point of control since April. 04 is the MC point of control since May 24th. So I expect this to test at 95, move up to 04, and it's likely to be a short squeeze. This is a market that is still in a weekly uptrend and a one-time framing up. The secondary open auction that squeezes into this 88, 91, 95 potential. I don't know which one is likely to hold. Impulse down. Get us the overnight point of control stat, which is about 80% probability of testing the overnight point of control in the day session. We still have an overnight stat that we're likely to breach, which is down at 69.50. We'll get our overnight stat, and now we're playing below last week's low, likely to flush through, and we're looking at 55. This is a very wide range, about 40 points in the day session, and highly likely. So this is scenario 2, down to 55, with some key areas there at 75, and so on and so forth. That's all I've got for you. I talked a lot. There was a lot to do here because of the action. Just remember, it is your job to have a plan, know your key areas, and then see what the market is likely to do, is doing before you respond. This is what we mean when we say wait for the market to come to you. Don't go chasing trades. And in order for you to last and to trade as a professional and to be consistent, let the market show you, hey, I'm not able to get above 95. Boom. Let's look for a setup. Let's look for a failed high. Let's look for a weak retest, and boom, hit the bid, and know that my target from 95 is 80, and below there is 75. And if it continues below, I'm looking at the overnight low at 69 and 69.50. Then from there, it is 55. And this kind of gives you the confidence to hold, as opposed to just watching every tick and being nervous and covering trades that you had planned to hold for a while. It's the narrative and the tests and the rotations and the auction is what gives that strength to the trader, in my opinion. Good luck, and